Hey everybody, happy Monday. I thought I'd throw out a Monday update. I haven't done one of these in a while, but I really haven't felt like I had any great information to give. And today I ran across a couple of things that I think is really helpful. And one of them is really talking about the evolution of mortgages from community lending all the way to big banks. Mortgages have been around since, they've found information about mortgages all the way back to the Roman society and through the Anglo-French death pledge. But U.S. home financing used to be a community effort. Before the 1930s, people pooled money in a building and loan associations, helping members buy homes gradually. Everything changed with the National Housing Act of 1934, and that created FHA loans, shifting the risk from small local lenders to banks and eventually the federal government. Homeownership soared to 44% in 1940 and 62% by 1960. As mortgage lending has evolved, interest rates have fluctuated dramatically. In the 1970s, rates were around 7.29 in 1971 and soared to 12.9 in 1979. Inflation pushed rates 16.63 1981 before slowly declining. The 1900s, rates averaged between 7 and 9, stabilizing with economic growth. The 2000s, rates dropped in the fives and sixes, fueling the home housing boom. After the 2008 crisis, rates hit historic lows, reaching 3.66 in 2012. And in 2020, we all remember 21, rates dropping all the way to 2.65 before climbing again due to inflation and economic shifts. While mortgages made homeownership more accessible, they also have transformed the housing market into high-stakes financial system. The securitization of the debt led to the 2008 financial crisis, proving that when risk gets too far removed, lending will spin out of control. And of course, in today's market, we have a whole lot more restrictions on how mortgages are done than we did in the past. Now, in some of the housing news, Treasury Secretary Scott Bessent expects the U.S. housing market to pick up soon. He believes inflation could quickly return to the Fed's 2% target over the next 6 to 12 months as the administration focuses on deregulation, energy production, and tax cuts. Right now, mortgage rates remain above 6%, driven by a high 10-year Treasury at 4.2. But Bassett predicts the housing will unfreeze in the coming weeks, especially with spring approaching. Winter storms and economic uncertainty hit pending home sales and new construction in January, but he sees a rebound coming. Meanwhile, with Trump's policies like tariffs and deficit reduction, it'll shape the economy in the next few months ahead. Hopefully, we will see lower interest rates. If you have a client looking to buy a home, let's work together and make it happen. As always, Nest Mortgage Group, efficiencies are priority, 24 to 48-hour underwriting time, 24-hour condition clearing, 30-day loan closings on all loan types. In fact, right now we're closing almost everything in 25 days or less. We are still getting a lot of appraisal waivers. So if you have a customer putting down 20% or more, let me know. We'll see if we can get an appraisal waiver before they write an offer on the house. Pre-approval, so I'm available anytime, day, night, weekend, weekdays, holidays, whatever. So let's make this a great year. Thanks for tuning in.